Well, just in the interest of time, maybe we'll get started. Thank you everyone for being here and being on time today. First, on behalf of the BCHA and our headquarters, I'd like to take the time to acknowledge that we're here on the lands of the Coast Salish people. We feel humbled every day to call this place home, to live here, to play here, to work here on the unceded territory of the Musqueam, Squamish, and Tsleil-Waututh Nation. So we'd like to take a moment to just appreciate where we are here today. My name is Shauna Lang, and I'm the Director of Sales and Revenue Optimization for the BC Hotel Association. And I'm really happy to have you all here to learn more about Canada's longest standing hospitality insurance program from our partner, Western Financial. One of our focuses here at BCHA, and a really critical focus, is that we're ensuring we're finding value and cost savings for our hotel members. We understand and we hear the cost of doing business in our sector continues to rise. Before I introduce our speaker, I just want to let everyone know today's session will be recorded, so you can go back or share. And throughout the webinar, please feel free to use the Q&A function, and we'll take some time at the end for questions and answers after the presentation. So today you're going to hear from Drew Woytko, our Director of Business Development from Western Financial. Drew's very passionate about working with our association and helping our members thrive. His role is responsible for program growth, sales and servicing, sponsorship, and just overall growing strong partnerships like the one we've built together, and the one he's built with many of you and developed several relationships over the years. I'm really proud of the work he's done, and we're very happy to have Drew and his team as a partner of BCHA. I want Drew to jump into the fun stuff, but I'm happy to say Drew has become a friend, and I'd like to introduce him. Over to you, Drew.
So much, Sean. I really appreciate the warm welcome, and again, it's a pleasure to be here in support of the BCHA and again the hospitality insurance program, which is, as you said, very near and dear to my heart. And I know we have we've got a finite window here of approximately 45 minutes, so we're going to do our best to keep things moving and grooving, and also again, certainly acknowledge with the group that's on the line here today that, we want this to be an interactive presentation as well too. So we're going to have a couple, maybe some poll questions for the group just to get some feedback on, and other ways that, we can keep things engaging. So you're not just hearing me do the insurance talk for 40 straight minutes, right? I know we've all got lots on our plates here. So, but again, thank you very much for the warm introduction. Just making sure everybody can see my screen okay as well too. It's okay. Perfect. We see that. All right. Yep. Well, that being said, let's kick off here. Business insurance for hotels. What does that mean? What's going on in the marketplace? What is going on as it relates to insurance? And well, I guess I should first introduce myself, as Shauna did. Again, Drew Woytko. There's the picture. I look very, very happy in that, and forgive me if I have a few bags under my eyes here today. But as Shauna pointed out, primary contact through to the BCHA as it relates to all things with respect to the program administration for the hospitality insurance program. And Shauna said it right. This is Canada's longest standing insurance program backed by Canadian insurers. And we operate and function in a very unique way that separates ourselves from a lot of the other, let's say, traditional insurance marketplace providers that may do insurance for hotels. Well, we also do insurance, and we do in a very unique way that we find and been very fortunate has provided significant value for not just the BCHA but all associations all the way east through to Ontario. Been lucky. Every association has said, you know what, your product, your structure, your service, that kind of aligns well with our members. So we're going to talk a little bit about that. What does that mean? What's going on in the insurance marketplace these days? What are we seeing and experiencing? In our role as a broker, and when we work on your behalf as business owners and going out to partner within insurance companies and field the best product and the best structure available for hoteliers. What does that mean? And what are we seeing and experiencing right now? What's changing in the industry? As your own industry changes, we have to make sure that the product advances as well, and it's there to support you in your time of need. we'll spend a couple minutes as well talking about a few key coverages. What are a few tips that, hey, if I were you and you were me, and you'd want to know, hey, what are some things that you can do to, to look out for when you're purchasing insurance, or some really important things that can really be critical for, making sure that you're insured to value, and so that if you do have a loss, that you're paid out properly. That's the number one thing we as brokers want to do and make sure is, yes, we want to find you a competitive product, but we have to make sure that the limits that we provide and work through with you and work with you in a consultative way, we have to make sure that they respond if you do sustain a loss. So we'll talk about that, a little bit about risk management, loss prevention. You see there as well referencing about Q&A. We're going to leave some time at the back end for that, but I know Gareth as well too has got some poll questions on the ready. Gareth, did you want to maybe kick off with an opening poll question here, and then I can kind of get folded in on things. So Gareth, did you want me to read these out loud, or are you taking this home?
No, so that poll will be showing up for each participant
Okay.
on the screen.
Perfect.
Feel free to talk to it, Drew, but we'll just wait for a few of the answers to come in, and then you can analyze the results.
Great. That's great, and we appreciate you putting those together there, Gareth. I think it's nice. We've got an intimate group here, and some names and faces I recognize, and a few others who may not, like I said, currently be on the hospitality insurance program. We'd love to hear, what do you know about it so far? Maybe you know a lot, maybe you know a little, maybe you don't know anything at all, and that's okay. We're going to be hopeful here over the next 30 plus minutes that we give you the ins and outs, the key things that you need to know, and then again, what's going on in the marketplace. What would I be looking at if I'm a business owner? What's upcoming here in the future. So let's get stuck in here. Who are we? First and foremost, Western Financial Group. If you haven't heard of us before, that's okay. Here's a quick rundown. We are one of Canada's largest insurance brokers. We are very fortunate that we have over 220 offices across Canada, and really pride ourselves in having a national scale and a national ability to support, whether it's provincial associations like the BCHA or national entities. We're able to administer group programs for those provinces or those or national outlets, either from our central office here in Winnipeg or within our local offices. We have dozens of local offices in BC and are really essentially coast to coast. You can see a couple of stats and numbers there, and hey, some nice things as it relates to being one of Canada's top employers, and some different kind of notorieties. I won't get into those in too degree, but the key is what's nice to know is, hey, we're a proud Canadian company. We're growing, and again, we're in your communities, and we find different ways to, like I said, support those communities through our Western Communities Foundation. Over $9 million given back to the communities that we work, live and play in, just in the last, I think, 15 years. And again, it's important to know that while I'm here in Winnipeg, again, we have offices all across Canada and within BC as well to support your business. Quick little history on the hospitality insurance program. That is essentially, again, what is one of the key functions that we're talking about here today. Is just to acknowledge and say, hey, the program has evolved and changed. We've been very pleased to kind of reach the almost 20-year mark here of the iteration that was first founded in Manitoba, in my backyard, and then has gone west, where we've gone through to Alberta, and of course you see the remaining other associations there. It's a testament to our testament to our understanding of the hospitality insurance space, and how we partner in with hundreds of hoteliers across those provinces, as well as with our insurer partners, to make sure we can provide again a long-term and sustainable program that's there to provide you again industry-leading coverage, a better structure, and a better way of doing business, so that you truly know that the rates that you're paying are reflective of within the claims within your industry. At the end of the day, I think if I'm a business owner, you buy insurance. It's not a lot of fun sometimes to buy insurance, and there's a lot of uncertainties of like, what does that mean? What am I really buying? We try to take a different and unique approach in being very consultative in the work that we do, but then also operating in a structure that we'll talk about here shortly that really ensures that that what you pay in terms of your rate is truly reflective of your claims in the industry, versus maybe a current existing provider you're with right now, or have been with for 5 years or 20 years, all within the insurance marketplace. That's very standard, where it's very speculative, and essentially they kind of have you, they have a tight grip on you in terms of, if you have a tough year and maybe you have a claim and a loss, what does that mean? What's the impact on your business? So we're going to talk about that in a little bit here, but that's a quick little history just to acknowledge and say, hey, we've been around for a little while, and we've been very pleased to support various different association partners all the way, yeah, like I said, from west to BC and east to Ontario. So I won't reference that. I feel like I already said a bit and bob of that already here. But again, currently have approximately 900 properties that are on the hospitality insurance program. And one thing that really I'd say differentiates ourselves is that we field a team of specialists, not generalists. I'd say most brokers, they're kind of generalists. Oftentimes, they're going to do 5, 6, 7, 8, 9 different jobs themselves. They're going to hopefully get new business. They're going to retain existing business. They're going to do their own claims. They're going to do their own risk management. They're going to do their own marketing and placement. And you do that and you kind of jump from one thing to the next, and it can be very challenging. And maybe you don't quite become an expert in your field of study. The key is within Western Financial Group here and administering this program, we have a team of specialists, about 10 commercial insurance advisors who all they work on with is with hoteliers and beverage focused licensees. We find if we do that and we have people who focus on one job, that allows them to become very good at it. That allows them to, again, specialize in an area, understand your industry, understand the challenges that you have within, the industry itself, from, again, strikes with the BCGEU or otherwise. Like, our team is engaged and aware of all the challenges and things that are going on within the industry to make sure that they can reach out proactively and work with you to make sure that, again, your coverage continues to be tailored specifically to your risk exposure and not some sort of speculative, well, I bought this product and it's just in a box and I had to buy the box regardless of whether I like it or not. That's not how we operate. That's not how we can work. So you'll see a couple things that separate us, because we take on some of the role of responsibility of an insurance company is, again, in-house underwriting, claims management services. We issue all of our own documents, risk management and loss prevention. That's all really done from our central office here in Winnipeg. And like most things that, and you as business owners would understand, when you take on sometimes more work from someone else or from another vendor, oftentimes what happens when you do that, or in this case, we run a hospitality insurance program where everybody renews on one day. If you take on responsibilities that the insurance company normally does, and you only go to the insurance company one time a year, well, who do you think gets a better deal? It's probably going to be it's going to be the program, right? Because everyone renews on one day, and we're taking a lot of things out of their hands and saying we can do it as well or better, and in providing that sort of, again, customer experience where it's really driven from one office. You're not being sent 15 different directions. We find that's a better structure for hotel and for business owners. So here is the one, let's say, visual and picture that I want to make sure that hopefully everybody takes a second to view and again, hopefully understands, but certainly pose questions. If you've got questions in the chat there, I want to make sure that we attack those, whether it's during or maybe afterwards when we leave some time at the end. This is one thing I want to make sure everybody understands is what separates the hospitality insurance program is this structure called protected self-insurance. And while you see a visual there, a symbolism that I always like to use to kind of explain what is the difference between our structure and the traditional insurance marketplace, I kind of liken it to swimming in a pool, okay? Or let's say a lake. Let's say Lake Okanagan or any other beautiful lakes that are in BC. It's kind of like as buying insurance in the traditional insurance marketplace, it's kind of like swimming in that lake or swimming in that pool by yourself. You're one person, you're in the middle of the lake, and you've got insurance that's really up to your neck. And you hope that if you don't sustain a claim and things are stable, that you can keep treading water. But let's say you do have a claim through no fault of your own. Wildfire comes through, a windstorm comes through. Somebody breaks into your business and causes damage to the windows. All of a sudden, you're paying $50,000, $1 million, $10 million in a claim. What happens when you're swimming in that pool in the lake by yourself is your legs get tired. And what happens is you can see there's two parties to that, the insurer and the broker, and essentially the insurer, they control all aspects of your premiums. So like if you do have a claim, what happens next year? What happens next year is you're paying a significantly more amount for your insurance because you were swimming in that lake by yourself and you're taking it on the chin, for lack of a better term, and being forced to, like I said, be seen as a team of one. For us, it's different. the hospitality insurance program is about 900, again, businesses coming together, an industry coming together and saying, you know what? We want to have some control. We want to have some skin in the game. And you can see the area there that is in green. That is the member-owned pool of funds. And that's what we use to pay the first portion of claims on the program that there's a certain program deductible for. And if the claim exceeds the deductible, that's where you have the excess insurance come to play. So it's kind of like standing in the shallow end. Okay, as opposed to having insurance up to your neck and having not a lot of control, I'd rather have 900 businesses stand in the shallow end, locking arms together and saying, you know what, if one of us has a loss, big deal, big whoop, because I only have insurance up to my waist. I don't have it up to my neck, and I've got my feet on the ground, drink in one hand, no problem, happy days. That is the hospitality insurance program. We provide predictability and more stability than the traditional insurance marketplace, and we'll tell you some of the factors that affect that marketplace here in some following slides. But that is the key difference here. And the biggest thing that is most important is that pool of funds, if there's funds that are left over, we return them back to our members pro rata to what they pay. So this is a structure that we use for many other programs that we administer, whether it's a municipal program or ones for veterinarians that have, sometimes produced multi-million-dollar returns. We actually have a return that's going to be upcoming here for, it's actually dating quite far back, many years ago, just in the Manitoba and Alberta sectors. You saw in the slides earlier, it was 2008 was when we only had two provinces on the program there. A loss pool has been finally paid out and matured, and there's going to be excess funds that are going back to business owners because we believe, why should those funds stay within our industry, the insurance industry? Why should it stay in that industry as excess profit? If you did your job as businesses and we did our job as program administrators, and the insurers are happy and we're happy, then all those excess funds should come back to you to reinvest in your business or use it to pay down your insurance next year. That's kind of the gist of the program that is really, like I said, a straw that stirs the drink and something that we believe provides significant value, not just because you can have a return of premium, but it also, again, it amounts to knowing that what I'm paying for is truly reflective of the claims that are within my industry. It's not speculative. Anybody who's not on the program right now, you're in that lake, essentially, not to fearmonger, but you're in that lake swimming by yourself. I want to know that what I'm paying for is truly reflective of what I deserve. That's going to be under the group program there. So those are some of the benefits that we referenced as well throughout that sort of a chat there. That, like I said, that fund can never be in a deficit position. It's fully backed by A-rated insurers who are our program insurers. Returns of premium. I referenced that earlier. $2.76 million of returns of premium have been issued back to program participants previously. This structure has been around for 20 plus years. It's been something that within the program, it's been something we've been doing for 40 plus years as Western. It's not speculative. It's not a flash in the pan. It works. It provides, again, great structure and better stability than you'd see on the open marketplace when things become very challenging. They certainly have in recent memory 4 or 5 years ago. And I'm going to show you some facts and figures here that kind of show you, hey, it's an interesting marketplace right now. There's lots of unique things happening. And this is where sometimes a program like this is an ample time to be on as things become a little bit more volatile. All right, so the marketplace. Let's talk about the marketplace right now. The marketplace, hey, here's the good news. It's starting to show some signs of softening. What does that mean? You say softening, a softening marketplace. Well, long story short is when we have insurers have more capacity and they have more predictability at times based on how they operate and how they, again, essentially, they're as a private business as well. How do they make money? It's two ways. It's through interest earnings on their investments as well as through underwriting losses and gains. So just the very thing that we were talking about there a minute ago. With the marketplace showing some signs of softening, this is essentially a buyer's market. So there's more insurers who are kind of, looking to kind of enter into the space and look to see if they can provide solutions for you. And so for those, like I said, who are not on the program or maybe been with your same broker for 20, 30 years or otherwise, hey, here's what my first tip is. Take a look this year. This is the year to look. This is the year to make sure that your broker is working responsibly and scouring the market and finding solutions, like I said, for your business. And we still see, again, in spite of that, there's still inflationary costs that are happening. You know, we can all certainly see it in a lot of the things I'm sure we're buying on a daily basis, either as people or as business owners. Cost of doing business is going up, and that's no different, right, with insurance and you as, you know, hotel owners. Cost of materials, cost of steel, hardwood lumber or otherwise for reconstruction costs, they're still going up. So we need to make sure that if, again, your premises were to burn down tomorrow, how much does it cost to rebuild? We've got to make sure that we run those numbers and those figures on an annual basis. And we're still seeing those sorts of inflationary figures of about 3 to 5% just to make sure that the limits are where they need to be. And as we always say, if there's increases or changes in the marketplace, it's always key to understand what's the difference between, you know, a rate increase that's sometimes required by an insurer, a value increase, which is sometimes required because we have to make sure we insure you properly, or also your business operations changing. You know, that's one thing that I think sometimes business owners, you know, can maybe fail to understand is, hey, if you're a hotel that generates generally, you know, $5 million of gross receipts, gross revenues on an annual basis, and then next year you do $7.5 million, well, that means you have more people and more bodies and more opportunities for risk and for loss to happen. And for insurers, they look at that for their liability specifically and say, well, because there's more of a risk and there's more activity happening, then, you know, there's needs to be an increase in the premium on that cost. It's no different than driving a Toyota Tercel versus a Maserati, right? One costs more to replace and rebuild, and it's the same thing for, you know, a Hilton property versus, you know, an independent owned, hotel that's in a small town in backwoods Manitoba, where I'm from. It's just two different properties. And so it's important to always work with your broker to make sure that you give them that information and intel about not just your business and your receipts, but specifically your operations. It's one of the tips I think I have a little bit later on is making sure that you tell us if you do have a simple thing like maybe deliveries starting, or, you know, that small patio that you're putting in place, you know, outside the restaurant on the first floor. Please reach out to your broker. Make sure they're aware of it. It can be critically important towards if operations change and something's not reported to the insurer, and then maybe a loss is sustained during that construction or during the normal operations of this new patio, that can sometimes be where we get into trouble. And then you know, the insurer's not aware, and they say, well, we weren't aware, and then that's misrepresentation. We're denying your claim. That's something we as brokers and you as business owners, we want to avoid that to the nth degree, right? And that comes from really good communication and collaboration as teammates. So. All right, let's talk a little bit about what's other things going on in the marketplace right now. Catastrophic losses. I'm sure we've all seen it or experienced it in some way, shape, or form. You know, this is a little bit of an older chart, but and I've got a newer one to follow. But from 2023, right, in BC specifically, you had some wildfires there in the Okanagan and the Shuswap area. You know, we had other sorts of different types of losses, and those estimated to about $3.1 billion in damage. Not a good year. What was last year? Even worse. 2024 finished at approximately $8.9 billion in catastrophic losses, which is the worst year on record, which is really unfortunate to see, right? Now we're seeing, whereas sometimes you'd have the once every 5 or 10 year storm or, you know, wildfire or otherwise, boy, it seemingly seems to be happening now on an annual basis or a biannual basis. Certainly here in my backyard in Manitoba, right, we have a ton of wildfires earlier this summer that have been really, really challenging. It's affected and displaced, I think, over 15,000 people in a lot of our northern communities. Manitoba as a whole just has only 13,000 hotel rooms. So it puts an incredible strain on the system. And of course, there can be then actual buildings that sustain losses, and then you have, again, higher claims. And what happens is, hey, even if there's higher claims in the Shuswap area or northern Manitoba or, you know, Moncton, New Brunswick, it doesn't matter. If there's significant losses, it affects the whole industry. That's my whole point, is to say we all kind of are in it together. And, you know, you'll see some other larger numbers there. 2016, I could almost make that a poll question. Who remembers maybe what the big loss was in 2016? We'll be looking a little bit east, further east and north to our partners in Fort McMurray, Alberta. That at the time was Canada's largest natural disaster in Canadian history, $5.1 billion with a B in losses. And again, why we say it is just to say, you may see some softening in the marketplace right now, which is really good. The question is, how long will it be sustained? Because we're still seeing an influx here in catastrophic losses, which has a significant impact on the industry. So you may have this push-pull of insurers who are maybe one day coming in saying, hey, I'll give you this great price. And then literally 1 year later, they say, you know what? We're out of here. We're not interested in doing hospitality business anymore. That's not something that we can do, as Canada's longest standing program and one that's the largest program. We've got to find sustainability. We've got to make sure that we're around here for the long term. And so that's an interesting thing to kind of just be aware of is, you may be looking at options and you find something that may appear to look very strong or maybe very appetizing. Two things. One, reach out to your broker. Make sure you review it. Review the fine details. Sometimes what can happen is you may be, I don't want to say quoted fool's gold, but you kind of get, thrown maybe a Swiss cheese policy. And then all of a sudden, maybe certain limits are not where they need to be, or certain coverages that are critical for a hotel, they're fully omitted. That's where it pays to, again, work with a broker who specializes in the industry. They know it front to back. They know the terms that come from this insurer and that insurer and this insurer, and they can speak to you and say, yeah, that looks really good. I would take it too. Or, you know what? Here's 3 things to be aware of that you can go towards, but I would sleep with one eye open because it's not going to work for your business if the following things happen. That's the value of a good broker. And again, catastrophic losses is something that is a significant challenge, and it's going to continue to keep, again, affecting the industry. So we referenced about, catastrophic losses, geopolitical tensions, inflation, certain supply chain shortages, they still have an impact on the insurance marketplace. Between, the number of, claims alone, we had more, I think in July of 2024 last year, in terms of physical claims that were reported through the Insurance Bureau of Canada than the entire year of 2023. So that's significant, right? And when we have those pushes and those strains, sometimes the effect on the industry or the pricing or otherwise can then come to follow, either right away or sometimes there's a bit of a delayed effect. And so, again, we've seen, like I said, a significant increase in claims here, and it's something to be aware of, and it's something to make sure that even you as the business owner, that you've got, again, proper, emergency response items. You've got certain things that are, built within your procedures of, if a loss is coming through, or sorry, if a storm is coming through, what are you and your staff doing to brace for that? How are you connecting with people? How are you, providing safety through to your guests who are on site? There are a lot of things that go past, again, just this, the sticker tape of what you're buying in terms of your insurance. It's really about what's the other 364 days a year? How is your broker and your insurer supporting you? And I'll reference one thing really briefly. Unfortunately, we were going to have on the line our director of risk management. Unfortunately, he's under the weather today, so he wasn't able to join us. But risk management and loss prevention is a key function and component to the program that makes it successful. What are the materials and the things that we provide through to all the business owners that are on the program, so they're aware of, hey, if I have an incident here, how do I respond? What do I do? Who do I contact? How do I log this? So that if we have, if somebody, that slips and falls outside of your room, they say, yeah, you know what, I'm totally fine, and they refuse medical care. Okay, well, that's great. That may feel like a very, easy instance that nothing may come of it. Well, what happens if less than 2 years later, so-and-so person goes to their lawyer and says, yeah, I'm pain and suffering, I broke my arm, I can't work, and now I'm suing you, Hotel ABC 123, for $2 million. Well, that's where you've got to have good procedures in place, and you've got to have good logbooks in place, and also good reporting through to your insurer and your broker of, hey, we had this incident, nothing's come of it yet, but just making you aware. Sometimes that little bit right there can be absolutely critical to defending your interests, which again is another part of our, the insurance offering through the hospitality insurance program, partnering in with, the preeminent law firms that we do, Dolan Wallace Follick, that's also based in Vancouver. They have essentially written everything has to do with liquor liability, certainly, and those, I'm sure many people on the line here, have some sort of responsible alcohol service. We partner with the best law firm to make sure that we're able to defend your interests, so that if a statement of claim is filed, we're here to support you in your time of need. It goes beyond, again, the bill of what you're paying for insurance. It's what's happening all, those other, like I said, 364 days a year. You want to make sure you have a comprehensive product, one that's specialized, one that has the trust of, different associations and has been independently audited. That's the hospitality insurance program. That's the difference of traditional insurance or someone who specializes this. So let's talk about another thing that we're seeing recently. Not recently, but I'd say one of the most biggest concerns here is cyber liability insurance. This is something that is a huge, let's say, concern within the insurance industry and one that's fast evolving and moving. Cyber liability insurance didn't exist 10 years ago. And now I would say that is probably the greatest and biggest tell of if you're working with a broker right now and you're not on the program and you don't have cyber liability or you haven't been convinced to get that, call tomorrow, because this is something that I think everyone has an exposure to. You have a POS system, you have a computer system, you're logging your guest information, they have personal information. All this stuff is critical, and the amount of bad actors and things that we're seeing in the industry of how people are through simple phishing emails and scam emails are being exposed to this and sustaining multi-million-dollar losses is very frightening. And I've just used this as one example. And I think hopefully some people on the line here, saw this in the news a couple years back was the MGM Grand, right? Had $100 million cyber loss. I think that hit most news outlets, whether it's VLTs being out of commission or, people not being able to access their doors. This all happened because simply a bad actor called in through looking and researching online through LinkedIn, found the IT department of a multi-billion-dollar company, basically faked as they were an actor of an employee, and within a week had access to their entire mainframe and caused $100 million of losses, whether it's lost revenue, through either kidnap and ransom, saying, hey, we've taken over your central frame here. We're not going to give it back until you give us $25 million. These are the things that happen to the MGM Grands of the world, to that small independent owned hotel in Moncton, New Brunswick that I referenced, or one that's, in Kelowna, BC. That can happen. And it is happening. So it's just to say, it's not to scare everybody. It's just to say, hey, these are important factors that when you're purchasing your insurance, you have to make sure that you have, a component of this coverage. And very fortunate that, hospitality insurance program members, they have choice. We start with a fundamental, you have to have this in order to be on the program. We also give options over and above with tier 2 and tier 3 coverage that can help you expand over and above, depending on your exposure and depending on, maybe your own history of having losses, you may be wanting to upgrade that as well. So we work with, again, hotels and business owners to find that right level of coverage and make sure that they're supported in this stance. This is just, again, another example of that. You can see a couple different tiers of coverage here, all different options to increase if you like. I won't get too much into the granularity of that. I'm already feeling like I'm probably chatting too much here. Speaking of which, as I maybe pivot to the next, I was going to say, Shauna or Garrett, did you want to maybe toss that next poll question? Sorry, I forgot about our poll questions.
All good. It's up there now.
There you go. Love to hear back from those who are on the line here. What are some of the things that you value when you're looking for and purchasing your insurance? I'm sure it's maybe potentially all 5, but maybe there's one that sticks out above the rest. I'm curious to see what business owners think about when they're purchasing their insurance and what really matters. And again, based on your experience, based on your marketplace, we certainly hope that, again, all sides of those are important. That really speaks to, again, the comprehensive structure of the hospitality insurance program is where we think that we check all 5 of those boxes. We know that we're a competitive solution. We know that the coverage, we have fiduciary obligations to make sure the coverage is best in class. We know that we've got tailored solutions. We've been doing this for, like I said, 20 plus years. And then again, in-house claims experience and claims adjudication, that's done as well in-house here. So you're not essentially, let's say, sent work to a 1-800 number. Maybe you work with a broker and then, you have a loss and they say, okay, we'll call the insurance company. Well, you call the insurance company, you've never spoke to anybody at the insurance company, you're essentially a policy number to them. We say, you know what? let's not do it that way. Let's work with your same commercial insurance advisor who knows everything about your coverage front to back. They'll take the initial call. They'll then work with our in-house claims management team, making sure that an adjuster is assigned that's on site within 24 hours of any loss. That's our commitment, and that's our focus in administering this program. Is there's a bit of a more of a specialized and a little bit more of a personal touch, which I think, especially in a business owner, when you're time of need, when you've had this sometimes very traumatic event, it's not, it can be very difficult things, from guests passing away to this to that to fires to claims to water damage. It can be anything in between. I think it's nice when you can speak to somebody that you, like I said, have 5, 10, 15 years of history with, and know again your business front to back, and then they can work with the team internally. So appreciate you running that there, Gareth. So let's pivot through to other, again, quick things here. Other coverage enhancements. I'll say this is also important. We know that, again, responsible sale and service of liquor is very important, and we know that sometimes through your regulatory board, sometimes there are sting operations that happen. Let's say to make sure that the responsible sale and service of alcohol exists. Sometimes, right, they come out and they pose as if they're over 19 years old, and then otherwise they're not, and then over 18, and then other times they're not, and then you can get slapped with a fine if you or have your license be called through to the regulatory board. And one thing that we've done in working with, again, Dolan Wallace Falk, is we've said, this is happening more. Can we work with our insurance company partners to find a way to cover off some of the fees that are associated with either defending your interests or the fines that then are resulted from this? And we're the first, again, provider in Canada to basically afford this coverage. It's called licensed contravention protection coverage. Like I said, I could probably speak about it for 40 minutes and do a separate webinar on that. I won't do it today. But it's just to say another example of the program continues to evolve. We're seeing and working with the industry leaders and experts to say, if we're seeing something and we see data that says this is happening, how can we support? How can we provide either education, risk management, loss prevention, or coverage so that you are then supported? And I'll, say we've presented this out, and we've had great intel and great response with people saying, you know what, I had this happen to me 6 weeks ago or 6 months ago, and the claim wasn't covered through a certain other large, let's say, Canadian broker. Now I want in. I want it on the hospitality insurance program. And just 2 weeks ago, we had another large group, let's say a large pub group, who joined the program because they did not have this through a certain 3-letter insurance broker, and said, we want that, and we like everything else that you're doing here. We're on the program. So just to say, more information that we can provide and more coverage and ways in responding to how your industry is changing. We're here to support. Let's talk about other little tips here, because I know I'm on the last, let's say 2-3 minutes here. So I'm going to go rapid fire here on my key tips, because I've already given a couple of key tips. But here's one thing that I think, again, matters when you work with somebody who works closely with you and really is here to make sure your coverage is tailored specifically to your risk exposure. That it's no more important to make sure that we do that properly so that we avoid what's called a co-insurance penalty. Some of you on the line may be familiar with that. Some of you may have heard that for the first time and say, that sounds like Latin to me. Here's what it means essentially is, insurers have a certain requirement for how you insure limits of coverage for certain, let's say, property items. So if you had a building that, again, it's not about the market value, but if it burned down tomorrow and the cost to rebuild it would be $10 million, you can't essentially say, you know what, I'm only going to insure for $5 million because I'm only interested in insuring to 50% of where I need to be. Every insurance policy has what's called a co-insurance clause, and typically it's usually set out around 90%. It says you must insure to at least 90% of your total replacement cost value. Otherwise, you can pay and be essentially, found responsible for any sort of a partial loss or a full loss. You can have to share in the claim more than just your own deductible. And so again, this is where I come into play and say, the work of a good broker is to make sure that they proactively do work and they run all their data and tools and things and do valuations to make sure that you're insured properly, because we always want to avoid having a co-insurance clause. So here's just a quick example. I don't know why I use such random numbers here. A sewer backup claim damages a building for $100,000 loss. This is a partial loss. The building was worth $528,000 and only had a limit of insurance of $300,000. Well, you can see $300,000. If you go by that equation of did divided by should times the loss, in this case, you need to be insured to $475,000. You're only insured to $300,000. So essentially, you're only being paid out 63 cents on the dollar. So 63 cents on a $100,000 claim. Well, you're paying your deductible plus $36,000 out of pocket because we didn't insure properly. We didn't work together to make sure we got all the information and detail from you and then ran all of our books properly to make sure that you're insured to value. That is critically important. That only comes from good partnership, from good communication. You know, that new patio we talked about, that new renovation that you did 6 months ago that maybe you forgot to tell your broker about, that matters. It matters in making sure that you avoid these sorts of instances where you essentially are paid, you know, you're penalized and you have to pay out of pocket. So just that first, the biggest takeaway and the tip there is it's better to be diligent, yeah, before a claim happens and reach out to your broker. Any change in your business, it's critically important that we're aware of it. It's not to be the, you know, the police or anything like that, but it's on us to make sure that we have a fiduciary responsibility to you as a business owner to give you the right coverage and to know what you need based on what you tell us. What we don't know, we can't work with. But if we have great communication, we can continue to tailor things exactly to where you need. So that if you have that loss, you know, I'm just paying my deductible. That's it. I'm not exposed to this sort of a co-insurance penalty. So that's one of my key, let's say, tips. And then we'll wrap up here with a couple more. Like I said, forget and regret. Don't forget to advise of any sort of material change to your business operations. You know, underreporting your annual revenues or your changes in stock or equipment can sometimes be really, really challenging for us to make sure that you're insured to where you need to be. It's important that your limits are in line with your operations and your responsibilities. I referenced there about the fiduciary responsibility. Our advisors, they're here to support you. They're not here to be, you know, difficult. They're here to make sure that you know, we're aware of what's going on in your business so that you're protected properly and we can support you in the right way. So that is, and the final thing, risk management, loss prevention is, again, just critically important to the success of the program. So there's a whole variety of tools. For those of you who have not visited our website before, or again, want to, you know, perhaps reach out and discuss more about the program, first of all, don't hesitate to give me a call. I'm happy to, again, run through that with you and tell you about our process. But also log on to our website there, westernfinancialgroup.ca/HIP. For those who are on the program, have access to, again, a whole variety of risk management tools, from, you know, advisories about, you know, salting your walkways in the winter, certainly more here in the prairies, or different things that you can do, again, to reduce the frequency and severity of losses. That's what we're here for, is to try to make sure that again, that member-owned loss pool has the best opportunity to have, again, surplus of premium that we can return back to you, and then you can reinvest it in your business. That's the goal of responsible program administration, and something that, like I said, we take great pride in and are very fortunate in partnering with the BCHA here to administer. So that have I even taken a breath yet? Have I taken a breath, Shauna?
I don't think so. I think we all were waiting for you to breathe. So
Okay.
thank you so much for covering so much in that time, and for creating a good story and lots of details for us to walk away with. We have opened the Q&A. So if you do have questions, please add them there. We do have one, Drew, so I'm going to read it out to you. How are recreational amenities like pools, gyms, golf courses, ski hills, etc., factored into liability coverage, especially during those peak or off seasons?
This is a great question. I think those elements are certainly important in of course, A, initially reporting when you're first joining the program, and B, the work that we do. I should have referenced one of the things that we do as well with the program is we send out risk management advisors who will come on property and do a full survey of the property and make sure that, hey, all the measurements are good, and we've identified, hey, is there any things that, you know, maybe don't look very good here and that could pose a risk to either your staff or to your patrons. You know, we do that complimentary. That's us as Western investing in the businesses that we partner with. We take on that cost ourselves. Typically on the open market, you're responsible for that. It's $3,000 to $5,000. Not cheap. But those elements as are related to, it was pools, ski hills, different things like that, absolutely, they can play a role in sometimes the liability exposure and what insurers see when they line up that identical hotel with a pool or without a pool. Yes, I'm sorry to say it. One with a pool, you pay more for your liability insurance because um, that is a different, unique exposure. The risk of drowning, the risk of death, et cetera, is just higher in operating a pool. It's not to say get rid of your pool. No, that's a great thing for a business. It's an attraction. It's something for the fun for the family, et cetera. But it is something that's important that we're aware of from the beginning, and then making sure that elements as it relates to risk management, loss prevention of, what are those pool rules that you have posted? Are there cameras on site? Are there different things that, again, reduce the frequency and severity of losses? We're here to work with you and not, again, be the boogeyman, but just say, hey, here's what we know in partnering with as many hotels as we do. Here's the general stuff you're looking for to, again, make sure that you're either compliant with either your own brand standards, for those who are under banner properties, or also what are the things that, the insurer is looking to do to just make sure that you've got the best opportunity so that if a loss does happen, we can defend your interest properly. So hopefully that covered off that answer. But it's all those things can matter in terms of, your liability exposure. And so it's just important that we communicate and partner in together to make sure we capture that and we don't misrepresent anything to the insurer. Yeah.
As a follow-up to that, Drew, what if the
Right.
pool or amenity is closed in the winter and emptied? Do they still need to insure it?
Yes. So we would say because that's still a physical space, right? It's like a physical part of the building itself. It's not a child. It's there. But it is important to advise, through to your broker of saying, hey, you know what, this is a seasonal operation here, whether it's a pool or some other service you're doing. Yeah, we're doing food deliveries, but it's only in these 6 months, or it's this many days a week. And here's who's driving the car, and they've got their own insurance. Those are all sometimes the variables and details that, we're looking to make sure we understand so that we can, again, properly report to the insurers and also, make sure that you're protected off so that if the pool is drained and somebody, somehow got access to it and then mistakenly jumps into an empty pool, then we've got problems and challenges as well too. So just sometimes there can be what sometimes feels like tough questions to be asked by either a broker or insurer. It's really just to make sure that they have the full lens, the full understanding. And when they have that as well, that's a final tip. That's how you actually get the best deal as well, is by being transparent up front. When insurers make assumptions because they don't get very granular or a broker doesn't get very granular with you, you work off the top line price. When we get a little bit more granular, we understand more and more and more, and we can defend and say, yeah, but they're doing this and they have cameras, or yeah, they've got this and they've got a lifeguard on site. That actually helps in providing more rate discounts. So sometimes it pays to be a little bit more consultative and work and get that granular to just make sure coverage is there and you're getting the best deal available. Yeah.
Great. Thank you. Any other questions? Those were the ones that were submitted through the Q&A tool, but perhaps people will reach out to you directly with any other further questions. We have one more. How is loss of revenue calculated during a closure or reduced occupancy period, like for example, a flood or fire?
So lost revenue, yes. So business interruption coverage is certainly a core, let's say, function. There's about 5 or 6 key areas within a commercial policy, and business interruption coverage is certainly an important one of that, because at the end of the day, you're right. If you are closed for whatever reason, we talked about a fire as an example. We talked about maybe some smoke damage, or again, roof or whatever. It could be closed for 3 days, 30 days, or a full year, or maybe even more. That's where we want to make sure your business interruption coverage is set to the proper limit. And so we work through a variety of different tools. We have some of our in-house tools that work off of, again, your gross receipts, and we have certain formulas that we work in with. Other things called profits worksheets that get a little bit more granular, and they help list out, again, some even more things about, let's say, key employees and different things that are fixed standing charges that even if you're closed, guess what? You're still paying it. You're still paying your mortgage. You're still paying those key salaried employees who are not either, they're very tough to replace. When you're closed and you're not in normal operations, you're still having to work and retain them. So we get very granular to make sure that we understand those numbers and then assign limits and work with you and say, okay, if you did have a loss, and let's say let's say the whole place burned down, how long would it take to rebuild? Sometimes a 12-month indemnity is not enough. Sometimes maybe you have a very large, expansive property and you're in, a very small town where it's tougher to sometimes source workers and move very, very quickly to rebuild. That's where we need to look at higher indemnity limits, 18 months, 24 months. That's a huge thing I think that's happening right now in the industry, is making sure that that business interruption coverage is done properly there. So hopefully that answered that question. I couldn't see the question, so I just heard it quickly, Shauna. Did that capture it there?
Yeah, I think it was, about when sections or types of areas of the business are closed during,
Yeah.
Or like maybe it's a seasonal hotel or something that has significantly reduced capacity or occupancy in some off-season, shoulder season.
Fair. So I think those things, as relates, it all just comes down to, if that's known and understood early, then that will help both the adjuster as well as the accounting firm who works with like figuring out what is that loss, how much are you going to be paid. They look back at receipts, sometimes even as well the year prior. It does get a little bit granular at times, but it is again all with the purpose of trying to give you that foregone revenue, so that it either provides you that same limit, all the way back to by the time you open up, or how soon, or sometimes how long will it provide you that coverage until you actually get back to similar like revenues had the loss not occurred itself. So there's different levels of coverage you can have and choice that you can have on the program, depending on your operations and depending on what's available. But that's where we're here to work with you to make sure we get those limits right and work with your business to have exactly what you need. Yeah.
Great. Thank you for that. I don't see any other questions in there. So at this point, we will say goodbye and thank everyone again for your time. And thank you so much, Drew, for taking the time to share those stories, share those tips, share the overview of the plan. And please get in touch directly with BCHA or Drew directly if you have any other further questions or queries about the plan. Yeah. Thank you.
Thanks, Shauna. Thanks, everybody.
Okay.
Take care.